Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody guys, today probably we will take a look at the Great British Pound. Well, I have decided to shift from the euro because on the euro currency, yes, reaction has followed on the poor non-farm payrolls release, and mostly it was according to what we have discussed. So based on the patterns that have been formed, so double repo pattern on the 4-hour time frame chart that we have discussed on Friday has been completed. Market has jumped as far as to 1250 area approximately, but later it has returned right back down. So it means that probably this mostly looks like the bearish side because poor reaction and inability of the market to continue move higher based on the poor non-farm payrolls release and based on the ISM poor numbers mostly suggest that investors are already now gravitating toward expectation of the rate hike. So they currently not very sensitive to even numbers that stands a bit against the possible rate hiking. So that makes overall this position weaker. And it means that there's, by the sentiment, by psych, maybe investors already are ready for some kind of the steps from the Fed because they were expected very long time. And right now, this market stands very close to this moment when the rates finally will be raised. So that's why that could probably explain some non-sensitivity of the investors to some even poor numbers or something of that sort. Anyway, overall situation looks a bit bearish on the euro currency, but at the same time, levels that we have specified have not been broken yet, and that's why it's not really currently not much sense to prepare the weekly research on the euro currency. So if, for example, market has broken the important levels, this will be quite another story. But right now, although yes, market shows some fluctuation above the 1130 area on the euro currency, but it hasn't broken it yet. And we definitely will return back to discussion on the currency in our daily updates. But right now, I think why not to take a look at the Great British Pound, especially because we really long time ago have taken a look at it. So what we have on the Great British Pound. On the long-term charts, guys, nothing really has changed significantly. So market shows really strong plunge on the high time frame charts, on the quarterly chart, on the monthly chart. And that's really exists some chances on the deep downside potential. So if market even could reach as far as maybe 106 area or a bit close to target, but anyway, the chance on the downward huge ABCD pattern exists. Situation right now changes very fast, and currently it seems that market could form a BCD pattern to the downside, but we will have to adjust our view as soon as new inputs will appear, how government and central bank in Great Britain will struggle with the Brexit consequences. So it's also will make an impact, and that's why the effect, the bearish effect could be maybe softer. But right now, based on the market mechanics, based on the speed of the drop, how fast this plunge has happened, this mostly suggests that some downward continuation could follow. But currently we're mostly interested not with some global setup, not really too extended in time, but mostly tactical. And definitely speaking, we have the plan of trading the impulse of this after this drop. So this drop was really fast, and the impulse still exists on the market. And market just behaves so that usually they have some kind of the momentum, and that's why after the strong plunge, usually market falls in the same direction, some kind of the due to this momentum, or automatically if you like it better. So and currently market just stands some consolidation after the drop. So this is the preparation for continuation, for the impulse momentum continuation. And we intend to use this retracement, to use this consolidation for taking the short position. But right now we need to estimate the target of this possible retracement, how far this retracement could be. And in recent times, market starts to form some careful bullish signs. So they're not really bright, and market action is really looks very fragile, very choppy. It seems that market has lost itself after this drop. This was really strong impact, not just technical or fundamental, but also the psychological effect. And investors right now, it seems some disoriented, so they can't decide what to do next. That leads to some very choppy consolidation. But in recent time, market has started to form something that lets us suggest that maybe some minor action to the upside will happen. First of all, take a look that we here have got this 222 buy pattern. So this thrust up, ABCD retracement down, and the nearest target of this pattern could stand approximately 35.50 area. Also take a look that this target will coincide with the daily average bar, fib level, and take a look open gap. Also, guys, it's interesting that here I use tool that use very rare. This is Judd Napoli 25 by 5 moving average. Take a look. Usually I use this I use this moving average to estimate some sentiment on the market. Because Judd Napoli used it to confirm some important breakouts or reversals on the long-term charts. He even has the example in his book how he used it on the soybean trading. It's a very useful tool because it could help you to estimate the sentiment. For example, take a look here. Market has tested 25 by 5 drop lower, but then returned it back up, tested again, small retracement out of it, breakout, retesting, and moving up. So here we have some kind of the breakout for 25 by 5 moving average. And this also relatively could suggest that maybe some sentiment is a bit shifting and market is ready for some at least minor retracement. Because the destination point of this retracement will become the point where we will have to make the decision of taking the short position to trade our A, B, potential C point, D pattern. That's what we would like to see. Okay. On the 4-hour time frame chart, we have another signs. So first of all, take a look. Market has broken through this triangle consolidation. So this was breakout, and it was able to hold here even on the non-farm payrolls release. So it hasn't returned right back down. Also, market stands above the September pivot point. It has been tested last week. The market right now stands very close to the monthly pivot resistance 1. Potentially, we could recognize here the butterfly. Maybe it will be formed. More probable that this will become the 1618 butterfly, because 1618 will let market to close the gap, while 127 stands inside of it. So the gap will stand open if market will complete just 127 extension. So that's the patterns that we will be watching for. As we really have no intention to trade Great British Pound on the long side of the market, that's why this is mostly some kind of the preliminary research. So what we will be watching for and see possible destination points of this upward action. So although we do not want to trade it on the long side, the results of this upward action will be very important for us. Because depending on where market will stop upward action, there we will be watching for possible sell signals and trying to take the short position on trading this rest of the momentum that has appeared on the Brexit drop. That's our major idea. In a very short-term perspective on the hourly chart, take a look on this most recent ABCD pattern. Here it is. Market has completed minor 618 extension. Now some downward retracement could happen. This first level is coincide with the weekly pivot point 132.40. Next one is 131.65. This confidence support. This area is very important, guys, because this will be also it coincides with the upper border of this triangle. So as you can see, it stands approximately at the same area. So market will start retracement down. The trend line will coincide with this confidence support. That's why we do not want to see that with British Pound will return right back down inside of this consolidation. That will make perspective of the upward action elusive. So for a bullish perspective, for perspective of the upward continuation, market should hold above this trend line and continue move higher. So maybe this development will take some more time, because you can see action is very choppy and investors probably stands in some kind of indecision because they maybe currently even do not understand and what really should be done on the Great British Pound, because it's still unclear what the policy will take the Bank of England, what measures will be taken for how this Brexit will take place. So it's a lot of questions, more questions that rather than the answers. So that's why will be probably very careful action. But potentially, this setup of the trading and tactical trading on daily time frame chart, this downward action seems nice. So let's see what will happen, and we will continue to keep an eye on the Great British Pound.